G'day there. Welcome to the closing bell on the 4th of December. Look, lots going on in the markets at the moment, so quite a bit to get through. My view on things changing a little bit as things fly around. We've had the Omicron variant throw a spanner in the works. That's kicked the stuffing out of oil. Gold is also selling off a bit further, so I'm getting a little bit more concerned there, and I'll show you that. Aussie dollar in free fall, and the US equities volatility picking up. I've been bearish on the markets for a while, just a bit wary, and that bearishness is increasing as I see a bit more trading action. So I just wanted to show you a few of those things quickly. So looking at gold prices, we have been watching this for a while. If you have been checking out my videos, I've been focused in on the correction of the last 15 months and my calculations based on that. And, you know, I look at this point of control being the midpoint of that range. That came in around 1875. So, you know, I saw this rally coming out of the buy zone of that area, which is that range there. And we saw the prospect of a good rally coming with a target back to that point of control. But the selling has come in really rapidly. As the short end of the US yield curve rises, obviously people are thinking interest rates on the up, gold is on the out. I don't know if that's the right view. I think ultimately gold will turn back up with the 10-year bond yields with a negative real yield of 4% or so. I think the case is there that gold can still head a lot higher. But the fact is the selling pressure is there and you've just got to accept it. So for me, as prices sell off, as I showed you last week, we've got the weekly sell pivot came in last week and the selling pressure has continued this week. You know, we're now down in that area where I want to see some buying pressure come in. Really, if it keeps heading down through here, I'll just show you quickly. If I'm looking at this, I'm considering this rally from those lows and I'm looking at those waves. And basically, I don't want it going back below that low. That really says that that whole rally structure is not looking good. And that would also be heading below the bottom of the buy zone, down below that sort of 1720 region. So under there, I'm really not liking it. And I'm thinking gold could potentially fall a lot further. I've said in the past, back under that 1680 region, which is the low of the whole correction, it can get pretty ugly under there. So I'm a bit nervous on gold. I've actually sold out of a few gold stocks in Pivot Trader. We're still long because I do think the case is there that gold should turn up. But I'm just wary of the fact that there was such strong selling pressure at that point of control. It's still in the corrective phase. And the selling pressure has continued this week after that weekly sell pivot last week. So for now, it's back in the area where I'd really like to see some buying pressure come in. And if it continues strongly to the downside, I will be cutting and running because underneath 1680 and all hell could break loose in that gold price. And moving on to the Aussie dollar, that is looking pretty weak, I have to say. I'm not showing you the last sort of 10 years trading. Basically, the Aussie dollar's been a long-term downtrend. I'm just showing you the most recent down wave in that long-term downtrend and focusing in on the sell zone of that wave. We've seen the reversal. I showed you this months ago with the sell pivot coming in there quite a few months ago. And we saw the start of that selling pressure. But then in the last few months, we've had a bit of a rally and prices heading back above 75 cents, even created the monthly sell pivot, which really threw things for me. But then the selling pressure came back in. And last month has confirmed the sell pivot, which is quite bearish for me when you have that attempted rally and then straight away it gets snuffed out. For me, that just increases my conviction that the downside is there and will probably head lower. And it's broken back below the August low as well. So I don't see that much support in this Aussie dollar. And really the target, initial target would be back to the point of control of that whole wave. That's around 68 cents. But you have to remember that the Aussie dollar is in this, decade-long downtrend. So maybe this is the next wave lower. So a failure through 68 cents, and I have targets down to, 59 to 62 cents. So that wouldn't be looking too good. But, that is something to consider, the fact that the Aussie dollar, which is often a risk proxy for the market, is looking pretty bad. And potentially that could bring out some offshore sellers into our market who've been long Australian stocks, for example. If the Aussie dollar is really getting hammered, then they're hurting, and they may hit the sell button on our stocks. So that can feed into a bit of selling. And you can see here with oil prices, we have the monthly sell pivot, and really, there's quite a high correlation between oil prices and the Aussie dollar commodities coming off, and that's on the back of this Omicron variant. But maybe it's on the back of the Fed's increasing taper talk as well, and rate rises, because we're not seeing a bounce back in oil after this Omicron scare has really eased off a bit. So that is interesting. After reaching the 2018 high, which was my real target on the move in the rally, it's been hit pretty hard with that monthly sell pivot. So for now, I'm backing off on being especially bullish on oil prices. I think there's a bit of work to do to turn back up. But, maybe this Omicron scare has just created really sharp moves in the market, and things can recover. But for now, I have to respect the fact that there is a monthly sell pivot there after reaching that 2018 high. So there could be more downside in oil to come. Now, moving on to the S&P 500, and I just want to show you the very short term, which is why I'm just getting a bit wary that there are some big players out there starting to sell the market. This is the daily chart of the E-mini S&P 500 futures. Here we've got the all-time high. You can see the daily sell pivot coming in there. Very big range day, which happened last week. That's a 3% range day. Then you get, a bit of work done, market rallies again, and then another wave lower. And this again, from Tuesday, was another 3% range day. And so often when the big players are out there, often they're not doing too much. When they are, they usually hit the sell button right late in the day, even in the last half an hour of trading, and they can push the market a long way in that time. And then they will rally it in the overnight markets, as far as I'm concerned, and then wait for the prices to squeeze higher, to look good again, like they're going up, and then they'll start selling it late in the day again. And we're just seeing signs of this now in the way prices are moving. And for me, if prices do start turning down again rapidly and heading back below that low around 4,500, for example, there's going to be one of these days where people will realize that it's on, and we could see a really bad down night of 100 to 200 points in that S&P. Now, maybe we'll be saved that going to the end of the year, volatility will die and we'll all have Christmas. That's fine. But just want you to be aware that as we head into the end of the year, that this intraday volatility expanding so rapidly, and those option skew really moving, VIX and VVIX really moving, hedge funds we can see are selling their major names in the last month. There's just a few signs there that some of the big players are lightening the load, looking for hedges, and that could be on the back of the Fed really changing their tune on inflation not being transitory. I think that's very big news. It is a market where you've really got to tread quite carefully, I think. And just finishing up on the ASX, we've been through this before. The monthly sell pivot happened a few months ago now. That's like my step one. As the market turns down, we'll have a number of steps it needs to go through before the real momentum kicks in. And we're still not in the phase where we're seeing that really strong selling pressure. But we've had a few of those steps, the boxes ticked on the way to that moment. And The first one being that monthly sell pivot in place. We're seeing rejection after the market's rallied from that monthly sell pivot, heading back to the lows. We've got the old highs from 2020 and all the way back in 2007, which is the area where if prices really tip over, all of a sudden it looks like a false break. The market looked like it was going to break out and rally forever, and all of a sudden it doesn't. All the people who have been buying over the last year start getting a bit nervous as prices start heading back to their entry price. They want to lock in gains, and we're heading towards the end of the year, aren't we? Many people may want to hit the sell button early before the end of the year if things do turn down now, to make sure they lock in their gains so that their bonus is looking all right for the fund managers and hedge fund traders, etc. So there's just a risk here that if the US gets hit over this next week or two, and we start heading back below that sort of 7,000 region, I just think people could be surprised by how fast the market could fall. And that could set up some great opportunities for next year. But if you have a big position already, or you're leveraged, and you're looking at all these gains disappearing rapidly, all of a sudden, the market could drop quite sharply, and you want to make sure that you're positioned for it, or at least that you expect it and that you're not going to be blindsided by it. So really, that's all I wanted to mention today. I think it's an interesting state of affairs for our market at the moment. There is a chance volatility could pick up if prices head much lower than here. So keep your wits about you, and I'll come back with more next week. Make sure you click the links below this video. Check out Australian Small-Cap Investigator, a service I run, and also Pivot Trader. Come along and I'll show you the nuts and bolts of my trading model, and you'll learn how to do it for yourself. All right, well, I'll come back with more next week. Cheers.